Okay, good morning to all of you. Today we are going to discuss couple of more topics in days 20, right? I am having a class today as well as tomorrow. So today and tomorrow we are going to cover three standards: in days 20, which is a government grant; in days 8, which is a change in accounting policies; and in days 10. In days 10 deals with the events occurring after the balance sheet date, guys. Right? So today we are going to discuss in days 20, and tomorrow we are going to discuss in days 8 and in days 10. Right? So let's start with in days 20. In days 20 deals with the accounting of the government grant and government assistance. Right? Accounting of the government grant and disclosure of government assistance. Right? So we need to understand what is a government grant. We need to understand what is the government assistance, right? Because this standard only talks us about in respect of the guidance or the accounting of the government grant and only the disclosure aspect of the government assistance. That means this standard does not talk about the guidance or the accounting of the government assistance. So government assistance is excluded from the standard. So it's very important that we should understand what is a government grant and what is a government assistance, right? So before jumping to the standard, right, let us devote 1 or 2 minutes on Indian gap as well, right? In Indian gap we were having AS12. AS12 deals with the government grant as well. AS12 principles and Index 20 principle are largely same, right? Apart from the couple of small matters which we need to understand, right? So if you are clear with the AS12 accounting of Indian gap, you will be largely clear with the Index 20 accounting of the government grant, right, guys? With this basic background, let's start with Index 20 accounting of the government grant and disclosure of government assistance, right? Okay, guys. So first, what we need to understand, we need to understand what is a government, right? We are going to talk about the government, right? And before this, what is the objective? The objective of this standard is only to provide the guidance in respect of the accounting of government grant and disclosure. That is what the objective is, right? And before starting this standard, let's also understand that what is excluded from the standard, from the standard, and what we are going to discuss in this standard. So in this standard we are going to discuss the scope. What is the scope of the standard? We are also going to discuss the definition of the government grant and the definition of the government assistance. We will also understand the recognition principles of the government grant, that when we need to recognize the government grant in my books of accounts. If the company has received the government grant from the government, right? So when the company should recognize the government grant, is merely a receipt of government grant is a recognition in the books of accounts or not? That is what we are going to understand. Then we will understand the different types of the grant, right? What are the different types? For example, capital grant, for example, revenue grant, for example, other grants. Then we will talk about the presentation. How do we need to present the grant in my books of accounts? Then we need to understand what are the practical implication, what are the practical issues arising because of the government grant. And then we need to understand what is the key gap difference from the Indian gap and Ind AS. And finally, we will discuss what are the disclosures requirement of Ind AS 20. Right, guys? So let's start with what is not in within the scope. Then we will understand what is the government grant, right? Okay. What is not within the scope? So what is the out of scope? Out of scope of Ind AS 20, right? What is out of the scope? First is tax relief. Tax relief or CZ zone. You must have seen that the software technology park, you must have seen section 10A, 10B of income tax. So those are the areas where the government must have given any sort of relaxation, any sort of tax benefit to the companies, right? So in that scenario, the tax relief or tax holiday, which has been given by the government, for example, section 10, 10B, special economic zone, software technology park, etc. So these are excluded from the scope of Index 20. That means if the government has provided any kind of the tax holiday to the company, If the government has provided any kind of tax holiday to the company, then the company is not required to pay income tax, right? Company is not required to pay income tax. That income tax is not considered as government grant in the books of that particular company, right? So this is out of the scope. Ind AS 20 is not applicable, right? So, sir, if Ind AS 20 is not applicable on this particular transaction, is there any other standard which gets applicable on this transaction? Yes, we have Ind AS 12. We have Ind AS 12, which gets applicable to this transaction. So, what is the applicable standard? Applicable standard is Ind AS 12, right? Which one is the applicable standard? Ind AS 12, right? Under Ind AS 12, we need to evaluate whether the deferred taxes needs to be recognized in that particular period or not, right? So in respect of in respect of your knowledge, Ind AS 12 says that if there is a tax holiday period and if there is any temporary difference which arise and which get reversed in the tax holiday period, no deferred tax needs to be recognized in that particular period, right? So you will get to understand this transaction under Ind AS 12, right? What else? Agriculture grant. If you guys have received any kind of agriculture grant, that is also excluded from Ind AS 20, and the applicable standard is Ind AS 41. Ind AS 41 deals with the biological assets, agriculture grant, right? Agriculture produce. If you have received any agriculture grant in respect of the agriculture produce, then it will get covered under Ind AS 41 and excluded from this standard. Correct? What is another one? Where the government is a shareholder, right? Where the government is a shareholder, whether it happens the government is also a shareholder in a company. Yes, it happens in a PSU sector where the government holds the shares, where the government is the owner of that company, right? And the government has given any kind of grant to the company, then that grant is outside the scope of Ind AS 20. Outside the scope of Ind AS 20, and then there is no specific standard on this. Then we need to look at what is the substance of the transaction, whether it should be recognized if the shareholder puts the money in the company, right? Whether it should be recognized as a deemed capital contribution or not, right? So where the government is a shareholder and the government is providing any grant to the company, that grant is not to be dealt by Ind AS 20, then there is no applicable standard. Then we need to look at the substance of the transaction. What is the substance? Substance means what actually is happening, what practically is happening on the transaction. Government is a shareholder and the government is putting the money in the company itself, then it is not considered as government grant. It is generally considered as a deemed capital contribution because government is the owner of that company, right? So in respect of the where the government is a shareholder, Ind AS 20 is not applicable, and applicable standard, there is no applicable standard. Then we need to look at the substance of the transaction. Then if there is any price changes, if there is any price changes in respect of any dealing with any special problem, if there is any price change in which government is supporting to a particular economy, particular company, right, to deal with the particular problem, then even then it is not considered as it is not Ind AS 20 is not applicable on such kind of transaction. Then and further there is no specific standard on that. Then we need to look at what is the generally accepted accounting principles. So these are the four items which get excluded from Ind AS 20. So first is if there is any tax relief or tax holiday provided by the government, right? How it can be a government grant? So if there is any kind of duty waiver by the government, it is generally considered as government grant, right? So in this case, if the company is earning the profit during the tax holiday period, then then the tax is not considered to be a payable to the government. So now the question arises whether the tax benefit enjoyed by the company is considered as a government grant or not. So Index 20 says it is not applicable. It is outside the scope of Index 20. So that tax holiday, that tax benefit is not considered as government grant. Then we need to look at Ind-AS 12, which provides the guidance of deferred tax, how to recognize the deferred tax on such benefit. Whether should we recognize the deferred tax during that tax holiday period or not, that guidance is to be provided by Ind-AS 12. Second is agriculture grant. If the company, if any particular company has received any agriculture grant, then that is also excluded from Ind AS 20, and Ind AS 41 will get applicable because Ind AS 41 provides the guidance how to account for the agriculture produce in a particular scenario. Right, guys? Third is government, where the government is a shareholder, it is also not applicable. It is Ind AS 20 is also not applicable. It is outside the purview of Ind AS 20, and there is no other specific standard which provides the guidance where the government is a shareholder and the government is providing grant to the company. Now, in that particular case, we need to look at what is the generally accepted accounting principle and what is the substance of the transaction. The substance of the transaction may be that the government is a shareholder who is putting the money in the company. Then it may be considered as deemed capital contribution and the not the government grant. Price changes, if there is any price changes where the government is supporting to a particular company industry due to change in the prices which have been significantly affected because of some problem, then it is not considered to be a government grant. Then it will be accounted by any other standard, but there is no specific standard on that. Then we need to look at what is the transaction, what are the different terms and condition. Then on the basis of that we need to do the accounting of such government grant in the books of the company. Right, guys? I hope the guidance or the concept of why these things are out of the scope and where they are covered must be clear to you. Let me know if there is any doubt on this particular aspect. Okay, guys, let me move on. Then let me discuss what is a government grant now. Okay, guys. Okay. Now the couple of factors. First is government. First is government. Who is a government? Can you guys let me know who is a government? What do you understand by government? So first we need to understand who is a government, right? Then we need to understand what is a government grant. What is a government grant? And then we need to understand what is a government assistance, right? This is all we need to understand. Okay. What is a government? So if we are living in India, right? So one is the national government, right? and the second one is international. And the second one is international. Right. So if I talk about the national government we are having in India, the central government, center government, state government, right? What ab- so center government is also government, right? State government is also government, international government is also government, right? What else? What else? What else? Local bodies, local bodies or agencies are also considered as government, right? Local bodies or agencies are also considered as government, right? So that means if I have received any grant from the international government, it is also considered as government grant. If I have received any grant from the center government or the state government, this is also considered as government grant. If I have received any kind of grant from the local bodies or the agency, then it is also considered as government grant, right? So it is important to understand who is a government. Government is a national government, international government. Within India, we are having two types of government. One is the center, second one is the state government, right? And the third one is the local bodies or agency. If I have received any kind of grant from any of these bodies, then it is considered to be a government grant, right? Now we need to understand. So one person has raised a doubt. Ambika has raised a doubt from Mumbai. Sir, in is export subsidy to enhance a particular sector is a government grant. So if the government is providing any kind of subsidy, any kind of waiver by the government, that is considered to be a government grant, excluding the four parameters. Excluding the four parameters which we have discussed. What are those four parameters? Tax relief. Tax relief by the government, then it is not considered as government grant. Government is a shareholder, price changes, and the fourth one is agriculture produce. In those four cases, if any kind of the duty or cess duty fee waived by the government, then it is considered to be a government grant, right? I hope, Ambika, this is the answer to your question. Okay. Now we need to understand what is a government grant, right? So government, we have already understood these are the different type of bodies of the government, right? Now what is a government grant? So government grant means transfer of resources, transfer of resources or economic benefit, economic benefit, right? What is economic benefit? In the form of cash, in the form of bank, and in the form of kind. The transfer of resources or economic benefit in the form of cash, bank, kind, in respect of any past or future conditions, in respect of operating activities of the company, operating activities, right? What is the government grant? Transfer of resources. The resources must be there, economic benefit must be there, right? What is the economic benefit? Cash, bank, or kind, in respect of any past or the future conditions, in respect of the operating activities of the company. That means the government grant must have been received either cash or bank or kind. What can be the kind? Kind may be, for example, land. The government has given a land, freehold land or a leasehold land at a free of cost to the company, then it is considered to be a kind, right? In respect of any past or the future conditions, in respect of the operating activities of the company, then it is considered to be a government grant, right? Then it is considered to be a government grant. Right, guys? Now the question is, what do you mean by the government assistance? Government assistance means, for example, if any technical advice given by the government, technical advice, marketing support provided by the government, then it is considered as government assistance, right? This is to a particular sector, to a particular sector, particular company, etc. Right? If any technical advice given by the government to a particular sector, technical advice which is given by the government to a particular sector, marketing support, etc., provided by the government to a particular sector company, then it is considered to be a government assistance and not a government grant, right? Index 20 only provides a guidance, only provide a guidance on the disclosure aspect. Disclosure. Accounting is not governed. Accounting is not governed. Okay, one person, Nivitha from Tamil Nadu, has raised one point. Is it necessary that the grant should be industry specific and not one granted specifically to one company as exemption? No, Nivitha, that is not the case, right? Grant can be given to a company. Grant can be given to a particular industry as well, right? So if any company, because the company is going to do the accounting industry, if we are not preparing the accounts of the industry, right, we are talking about the company. But here what we are saying, if the government has given any kind of grant to a company or an industry, right, in which company is benefited, then the company has to do the accounting of that government grant, right? But the government assistance, right, if the government has provided any kind of technical advice to a particular industry to operate in that fashion, if the government has provided any kind of marketing advice, right, then that will be accounted, then that will not be accounted as a government grant, that will be accounted as a government assistance. And the accounting of government assistance is not governed by Ind-AS 20, right? There is no need to recognize that technical advice, fair value of the technical advice in the books of the company. There is no need to recognize the fair valuation of the marketing advice in the books of the companies, right? It's only a matter of the disclosure, right? I hope this is the answer to your question. Any other doubt on the definition, on the what is a government, what is government grant, and what is government assistance? Any doubt on this, guys? Any doubt? Happy to answer. Please let me know if there is no doubt so that I can proceed further. I'm getting very low response today. I'm not sure why this is happening today, but I'm getting very low response. Guys, please let me know yes or no so that I can move ahead. Okay, let me move ahead. Okay, now I'm getting couple of response. Ronak Chaya is saying no doubt, sir. Kumar from Faridabad, no doubt, sir. Neha from Delhi, no doubt. Ambika from Mumbai, sir. In assistance is provided free of cost. Yes, assistance is provided free of cost. Okay, so if I say the government grant, right, and government assistance, right, Index 20 provides guidance on accounting and disclosures of government grant, right? Index 20 does not provide guidance on accounting of government grant, right? Index 20 provides guidance on disclosure of government assistance, right? Provides the guidance on the accounting and the disclosure requirement of government grant, but government assistance provides a guidance on disclosure but does not provide a guidance on the accounting of government assistance, right? Recognition. Recognition of government grant, right? When we will recognize the government grant in the books of accounts, reasonable assurance, reasonable assurance. What is the reasonable assurance? Reasonable assurance of A, all the terms and condition of government grant will be met. What is the reasonable assurance that all the terms and condition of the government grant, I'm not talking about government assistance here, only a government grant will be met, right? Entity should be of the view, the company should be of the view that all the condition which is mentioned in the government grant must be met, right? And second is the grant, the government grant will be received. Second point is mere receipt of grant, mere receipt of grant does not results in recognition, right? So now guys, what we are doing, we are understanding the basic concept of the government grant. When we will take up the practical questions here, then you will be able to understand these things in a practical manner. right? So recognition of the grant, when the company has received a grant from the government, when the company will recognize that particular grant in the books of accounts, first there must be a reasonable assurance, there must be a reasonable assurance that the company will fulfill all the terms and condition, all the terms and condition of the grant will be met, and the government grant will be received by the company in the future. Only then company will be recognized government grant in the books of accounts. Second point is mere receipt of the government grant does not result in the recognition of government grant. All the condition needs to be fulfilled, and the company is of the reasonable assurance that this grant will be met in the future. Right? So this is the recognition principle of government grant. Right? So this is the recognition principle of government grant. Let me know if there is any doubt so that I can move ahead. So one person, Kostav from Nasik, has raised one point. Sir, government grant from the international government can also be in the form of kind. If yes, can you give an example? It can be very simple. I have already given an example, right? Kind, in kind, I can receive from the local government, central government, or the international government. What is kind? It can be anything other than the monetary value. For example, land. If I have received a land from the international government which is located in a particular country, it is considered to be a government grant in kind, right? So international government is also covered. Kind is also covered in a government grant. Can be in kind, can be in cash, can be through bank. I hope, the cost of this is the answer to your question. Should we move on, guys? Any other specific query? Okay, let's move on. Now let's understand what are the different types of grant. Let's understand what are the different types of grant. And secondly, guys, when we talk about the recognition criteria, we are following the accrual method of accounting, right? We are not follow the cash basis of accounting. Cash basis of accounting is only followed in case of the preparation of the cash flow, right? Ind AS 7 and AS3 permits the recognition of or the preparation of the cash flow on two methods. One is the direct method, second one is the indirect method, right? But in the accounting books, we are preparing and following the accrual basis of concepts, right? Keep this in mind always. Okay, types of government grant, right? What are the different types? Anyone has any idea? One is capital grant. One is capital grant. Second one is the revenue grant and some other specific cases, right? One is capital grant. Second one is the revenue grant. Third one is some specific cases, right? What is capital grant? Capital grant is primary condition. Primary condition is the acquisition, purchase, or construction of any asset, PPE, etc. Right? The primary condition, the company must have received the grant in respect of a primary condition. And what is the primary condition? Acquisition, construction, and purchase of any asset is called capital grant. Right? What is revenue grant? any grant other than capital grant. Any grant other than capital grant is a revenue grant, right? And how to do the accounting? How to do the accounting of capital grant? There are two methods. There are two methods. First is reduction from cost. Reduction from cost. And the second one is recognized as a deferred income. Okay, so Chavi from Haryana has asking one question. Grant from United Nations, World Bank, etc. should also be fall under the government grant. Yes, yes. Any government bodies, any government agencies will also fall in the definition of the government, and any grant received from any of the bodies or agencies, it will form a part of the government grant only, right? Reduction from the cost, and the second one is recognized as a deferred income. And I am requesting you guys to please prepare your coaching notes that will help in remembering the concept and understanding the concept, right? So what is the accounting entries in this case? First, I will purchase the property, plant and equipment like this. Let's say I purchase at 100 rupees, right? And I have received a government grant. So what I will do, bank account debit to PPE 20 rupees. So in a nutshell, I have reduced, in a nutshell, I have what I have done, the government grant I have reduced from the PP cost, right? This is called recognition of government grant, right? Recognized as a deferred income. So what will be the first accounting entry? First accounting entry will be the bank debit 20 rupees. Sorry, first is the purchase of PPE 100 rupees, right, to bank. And second accounting entry will be bank debit 20 rupees to deferred income 20 rupees. Government grant. I hope this is visible, right? So in this case, what we are saying, there are the two methods of recognition of the government grant. One is the reduction from the cost, right? In this case, what we will do, we will recognize the property, plant and equipment. We will recognize the property, plant and equipment at the full value. Then we will reduce the amount of the government grant from the value of the PP itself, right? So here the property, plant and equipment will be recognized at net of government grant. But in this case, what will happen? I will recognize the PP gross basis. This is called gross basis. What is this? A gross basis. This is a gross accounting, right? And this is a net accounting, right? Because I've reduced the PP by the amount of the government grant, right? So one person is saying, Sonu Sharma from Jaipur, accounting is like a same in intermediate? Yes, Sonu, because why the accounting is same? Because I said initially the accounting under Ind AS is same as that of Indian GAAP, right? Accounting is same as that of under Indian GAAP, right? Let's move further. Okay, so in case of capital grant in option 1, deduction from cost, deduction from cost, right? How should I compute the depreciation, right? First of all, I will say my PPE is, let's say, 100 rupees. Let's say my salvage value or residual value, let's say 10 rupees. This is 90, right? And after that, I need to reduce the government grant 20, right? Now this 70 rupees is eligible for depreciation. This 70 rupees is eligible for depreciation. So what is the depreciation formula? Depreciation is equal to PPE minus residual value minus government grant divided by useful life. Hope this is visible at the bottom. PPE minus residual value minus government grant divided by useful life will be a amount at which I need to compute the depreciation for the company. Right, guys? Let's take one example to understand the accounting treatment of government grant. Let's take an example. Let me rub this. You can also read the example I have given in my PPT slides. You can also read the example. Okay, guys. Let's take an example. Z Limited. So it's page number 17 of the PPT file. Please read the question. Z Limited purchased a fixed asset of 50 lakhs, right? So case study. Z Limited, right? So Z Limited purchased the fixed asset at rupees 50 lakh rupees. PP purchase किया 50 lakh rupees का. Okay. Which has an estimated useful life of rupees 5 years. So useful life is 5 years. Correct? With the salvage value, that means residual value is 5 lakhs. Right? Residual value is 5 lakhs. On the purchase of the asset, the company received a government grant of rupees 10 lakh. So company has received a government grant of rupees 10 lakh. Right? Pass the necessary journal entries in the books of the company for the first 2 years if the grant amount is deducted from the value of the fixed asset. So this is a first of all, let's evaluate. The, the company has received a government grant, right? It is in the form of the cash. What is a government grant? Transfer of resources by the company. Transfer of resources by the government in the form of cash, kind, bank, in respect of the past activities, in respect of the past or future condition, in respect of the operating activities. So this is a government grant, right? And this is in respect of the PP. So I will say this is a capital grant, right? And how to account for the capital grant? There are two options. One is recognized as a deduction from the cost, and the second one is recognized as a deferred income in the liability, right? So this is the this is the example, and with this example, let's prepare. With this example, let's prepare Let's prepare what should be the accounting entries in the books of accounts of the company. Okay, one person is saying, Kunal from Faridabad is saying, sir, there is no PPT on the slide on the side. No problem. Kunal, let me put the case study like this. Z Limited has purchased the PPE of rupees 50 lakhs, right? Useful life is 5 years, the residual value is 5 years, government grant is 10 lakh, right? So in this case, how to account for? So first accounting entry, option one, if this is counted as a deduction from cost, deduction from cost, right? So first accounting entry will be bank account debit to P. First, I will recognize the PPE first, not the government grant. So I will recognize the PPE to bank of rupees 50 lakhs, right? And the second accounting entry, what I have received, government grant of rupees 10 lakhs. So I will pass bank debit to PPE of rupees 10 lakh, right? Or I can pass, or can be recognized on net basis, right? I can recognize this accounting like net basis, bank account debit, PP debit to bank, PP debit to bank, 40 lakh rupees, right? So this is recognition of grant, and this is purchase of PPE, right? And this will be on day one. Any doubt on these accounting entries? Any doubt, guys, on these accounting entries? Okay, people are not asking question today. Okay, now the second point is after the 31st, after the 1 year, 31st March, let's say 2000, let's say 2020, right? He has purchased the asset on 1st April 2019, right? So how to compute the depreciation? I need to recognize the depreciation. What will be the accounting of depreciation? Depreciation debit, P&L debit to accumulated depreciation, right? How should I compute? My PP value is, let's see, computation of depreciation. PP is 50 lakh rupees minus government grant minus residual value. What is the residual value? 5 lakh, 45 lakhs. Ideally, this 45 lakhs is eligible for depreciation. But since I've received a government grant and I've deducted government grant from the cost, 10 lakh rupees. That means 35 lakh rupees is eligible for depreciation, right? And the useful life is 5 years. So what is the depreciation? 35 lakhs divided by 5. That means 7 lakh rupees per annum. That means what is the accounting entries? 7 lakh rupees, right? 31st March 2021, right? Or I can say, that this depreciation will be charged to P&L, right? I have written here only. And this accumulated depreciation will be adjusted from the cost of PPE, right? And the next year, 31st March 2021, right? Same accounting entry I need to repeat. Depreciation debit to ICDEP, which is 7 lakh rupees, right? And sixth is accumulated depreciation debit to PPE, which is 7 lakh rupees. Right? So if I prepare my balance sheet, right? If I prepare my balance sheet as of 31st March 2000, 31st March 2020, right? My balance sheet will be like my balance sheet will be like I have purchased the PPE 50 lakh minus 10 lakh, 40 lakhs and minus 7 lakh, minus 7 lakh 40 33 lakhs, right? And in the P&L I have a depreciation of rupees 7 lakh. So my dear friend, this is called the deduction from the cost option. That means where the government grant has been adjusted from the value of PPE itself. That is what the cost option is. I hope this is properly visible and the concept must be clear to you. Right? Please let me know if there is any doubt. Let me reiterate the facts. Right? The company has purchased the asset of 50 lakh rupees. A residual value is 5 lakh. Government grant is 10 lakh, and we need to pass the accounting entry from both the method deduction from the cost, and the second one is deferred asset. So in this case, first we have recognized the purchase of asset, then we have recognized the government grant, and then we have just computed the depreciation. How to compute? Cost minus residual value and minus government grant divided by the useful life will be the amount of depreciation. Right? I hope things must be clear to you. As a simple question, simple example. Should I move on, guys? Please let me know if I move on. Yes or no? People are not saying anything. Let me move on. So this is option one. Let's do the accounting. Let's do the accounting in option two, which is a deferred asset scenario, which is a gross accounting. This is called a net accounting as well. Guys, please let me know if this is fine or not. Any doubt? I'm not getting proper response. Okay. Option two, deferred asset, right? Deferred asset. First accounting entry, PP debit to bank of rupees 50 lakhs, right? Second is we have received a government grant of rupees 10 lakh. Now in this case, I will not credit PPE. I will not credit PPE. I will credit deferred 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 liability, deferred income, right? This is not asset, deferred liability, right? 10 lakh rupees, right? And now what will happen? I will charge depreciation after 31st March 2020. That means after 1 year, I will charge depreciation. And depreciation needs to be computed on which value? I have not reduced the PP value by the amount of grant, right? Now my PP value is 50 lakh rupees. How to compute the depreciation? Can you compute depreciation in this case, guys? Quickly. Okay, one person is asking, Bharat from Bangalore, sir, is there a mandate to use accumulated depreciation while depreciation? Can't I directly debit depreciation against the PP? You can do, Bharat. There is no doubt in that. You can do that accounting as well, right? Accumulated depreciation, ideally, practically, when we do the accounting in the companies, we create an account of accumulated depreciation, and that accumulated depreciation will be recognized as a netting off from the PP cross value, right? But you can do the net accounting depreciation debit to PP. There is no problem in that. That is absolutely correct. Okay. So in this case, how to compute the depreciation, right? PP value is 50 lakhs minus residual value 5 lakhs, and I've got 45 lakhs. So depreciation is equal to 45 lakhs divided by 5 years, which is 9 lakh per annum. So I will recognize 9 lakh rupees per annum. Couple of people have computed this number. Kunal from Faridabad, Costa from Nasik, depreciation is equal to 9 lakh. Nivedita from Tamil Nadu, 9 lakh. Absolutely, guys. Fourth entry is accumulated depreciation to PPE, 9 lakh rupees, right? Now, one thing is I have depreciated this number, right? What is the accounting treatment of this 10 lakh rupees? This will be charged to P&L. This will be charged to P&L. On which basis? On which basis? Over the useful life. Charged to P&L over the useful life of assets, right? So what is the fifth entry? Fifth entry will be deferred liability debit to, sorry, deferred liability will be debit to P&L, right? This will be an income. This will be a other income, right? Of rupees 2 lakhs, right? How this number will be computed? 10 lakh divided by 5. So effectively what will happen in the earlier case? In the earlier case, we have recognized a net depreciation every year 7 lakh rupees. In this case, if I draw the P&L, if I draw P&L here, if I draw P&L, so I have a depreciation of 9 lakh and I have a other income of 2 lakh. So in a nutshell, I'm getting a 7 lakh rupees net amount or net impact on the profit. And in the earlier example, I have also got the 7 lakh impact on the profit in the P&L in the first year. Right, guys? So this will be the accounting entries in case where the company has taken a route of deferred liability and not the deduction from the cost. Right, guys? So this is called a gross accounting, and the previous one is the net accounting, and the accounting impact in both the cases will be the same. So one person is saying, Ambika from Mumbai, sir, can it be charged in proportion to the depreciation? So if you charge in the proportion of depreciation, even then you will get the same number, because the depreciation amount in all the 5 years is 9 lakh rupees only. 1:1, right? So you will get 1:5 impact in the first year, and the amount will be 2 lakh rupees, because the depreciation is on a pro rata basis. right? But if the company is following a WDV method, right? In that case, if you compute, if in that case, ideally it should be computed on the in the ratio of the depreciation, because the method of charging depreciation is different from the straight line. Straight in respect of the straight line, it doesn't impact whether you are computing on the basis of the useful life or whether you are computing in the ratio of the depreciation, right? But when the company is charging a depreciation on a WDV method basis, then it should be computed on the basis of the ratio of the depreciation, right? That means in proportion of the depreciation charged to P&L. Right, guys? Any doubt? Any doubt, guys? Okay. So one amendment has also been made in the standard in respect of the cash flow. In case of capital grant, right? In the capital grant, what is the impact on cash flow? Impact on cash flows, right? The standard says the purchase of the PPE, purchase of PPE, right, will be recognized on gross basis. Gross basis. That means whether we are following option one or not, irrespective of option one or two, right? PP needs to be recognized on a gross basis. PP needs to be recognized on a gross basis. That means the grant which I have received, if I'm following the option one deduction from the cost, even then I need to recognize the cash outflow of the PP in the cash flows on a gross basis. And the government grant and the receipt of government grant will be recognized separately. Receipt of government grant to be recognized separately. Right, guys? Any doubt? Any doubt, or should we move on? Please let me know if there is any confusion. Are we clear? This is a simple standard basic accounting entries, which is similar to Indian GAAP as well. Okay, let's move further and understand the guidance of and the concept of revenue grant. I hope you guys are preparing your coaching notes. ओके सोनू शर्मा फ्रॉम जयपुर गवर्नमेंट ग्रांट का बैलेंस शीट में कहाँ शो होगा ओके ओके liability right non current or current deferred liability, right? And deferred liability, right? And PPE like this, right? Net. Net means it is after depreciation. It is after accumulated depreciation, right? This is how we need to show in the, okay. Now impact on cash flows, right? Operating activities, investing, and financing. Correct? So let's say I purchase a PPE, purchase of PPE, right? In the previous example, I will recognize 50 lakh rupees outflow, right? And I will recognize receipt of government grant of rupees 10 lakh, right? This is how we need to present cash flows, right? So the guidance is earlier the purchase of the PP needs to be recognized on a net basis, right? Now the standard is saying the purchase of PP is to be recognized on a gross basis, irrespective of the method you have adopted, and receipt of the government grant needs to be recognized separately. This is the impact on cash flows. Yes, so one person has raised, Rohita from Chittor is saying, can you provide an example for the impact on cash flows? So Rohita, this is how we need to present my cash flows. This is how I need to present the impact of purchase of PPE and receipt of grant in my cash flows, right? This cannot be offset, cannot be offset. This cannot be offset, right? Okay. So Kunat Kumar from Faridabad, sir, if we receive the government grant, then where should we put cash from grant in cash flow? So I think I have already answered, Kunat. You can see on the board that this is how I need to present the cash inflow and outflow in respect of purchase of PP and receipt of government grant in the cash flows. So Bharat from Bangalore is saying, sir, my personal belief is that in the first method we are showing higher operating income to the viewer of our statement, at least on the face of it, due to low chargeability of depreciation, although the total income may remain the same. Okay. So first point, Bharat, you have raised the operating income. Operating income. So in respect of the government grant, that will also be adjusted while computing the operating income. And secondly, the presentation of the operating income is not allowed as per the schedule 3, right? As per the schedule 3, if you see, there is no guidance of the presentation of the operating income or operating profit, right? In India's one class, we said that we need to recognize our balance sheet, our P&L on the basis of the nature of classification, right? Not the functional classification, right? So this, if we are presenting operating profit, first of all, that is not allowed, and it may also result into the functional classification of the expenses and the P&L, which is also not allowed as per India's one, right? So operating profit we will not be able to show in my P&L. Hope the concept of the capital grant must be clear to you, right? Should we move on, guys? Okay, okay. Let me rub this. Okay, so we have discussed the capital grant. The second one is the revenue grant. The second one is the revenue grant. What is revenue grant? Grant received from government, right? Which is which is not a capital grant. Grant received from the government, which is not a capital grant, right? What is the accounting treatment? Accounting treatment will be bank account debit to deferred income, right? Which is a liability, right? This deferred income shall be charged to P&L on the systematic basis, right? In the PP, we were saying that it should be charged to P&L in the option 2 on the basis of proportion or the useful life. But here we are saying it shall be charged to P&L on a systematic basis, right? Such grant shall be recognized as below. Option 1, other income, and option 2, deduction from cost. Okay, couple of people have raised the doubt. Let me read those doubt. I think there is a delay in reaching the query to you. Okay, no problem. Bharat is saying yes, sir, pretty much clear. Ronak sir, for balance sheet presentation, could you please plot amount for from our example taken? Okay, Ronak, I have already plotted the balance sheet in both the cases, option 1 and option 2. I'm not sure whether you have noted down or not, but you can see in the video later on. I have plotted the balance sheet. Okay. Costa from Nasik is saying, sir, if we follow the method 2 of accounting, the amount credited to P&L will be adjusted while calculating the cash flows from the operating activity. Am I correct? Okay. So first of all, Bharat, I think, sorry, Costa, in respect of the operating activity, right? So operating activity, I need to adjust the non-cash item. So I need to start from the profit before tax and I need to adjust the non-cash item, right? So whenever you charge that deferred income to the P&L, that will be adjusted. And whenever you charge depreciation, that will be adjusted because that is a non-cash item in the P&L, right? So you are correct in that sense. You are correct in that sense. Okay, let's move to the revenue grant. What we are saying in case of the revenue grant, a grant received from the government, which is not a capital grant, is a revenue grant. What is the accounting treatment? Bank account debit to the deferred income or liability, right? This will be recognized in the liability section. Recognized in liability, right? And how it will be recognized? Let's see. If this is my balance sheet, right? So I will recognize my non-current liability, and this is my current liability, right? This is a deferred income or liability. This is again a deferred income. Right? The deferred income shall be charged to P&L on a systematic basis. In the PP option 2, we were saying it will be charged in the ratio of depreciation or useful life, but here we are saying it will be charged in the P&L on a systematic basis. What is the systematic basis? It depends upon the terms and condition. What is the systematic basis? Depends on terms and condition. Terms and condition. Maybe this will be a cost. Right? Depends upon the terms and condition. Right? It may be on the basis of cost. Maybe on cost basis. That means the cost which I am recognizing in the P&L, on that basis, it may be a systematic basis. It depends upon the terms and condition. It may be on the related cost. And such grant shall be recognized on the basis of, there are two options. Option one is where the grant is to be recognized as other income, and second one is the deduction from the cost. And how this deferred liability needs to be recognized: deferred income, current liability as well as non-current liability. Right? If the terms and conditions are more than for 1 year, then I need to break this into two parts. One is current as well as non-current. Right, guys? I hope this must be clear to you. Should we move on? Any doubt? Please let me know if there is any doubt, or should we move on further? Okay, let's move further. Okay, guys. Now we have captured capital grant, revenue grant. Then we have the specific grants, other specific grants. Right. So first is loan from government at nil or below market rate. Right. Loan from the government at nil or below market rate. Right. Or I would say loan from the government is of two types. Right. One is below market rate, nil or below market rate, and the second one is forgiven loan, right? Not repayable. Let's understand. Let's understand what is nil and the below market rate. Let's say the government has given a loan to a company, to company ABC, to ABC Limited, right? Let's say the loan is 10 lakh rupees, right? At 6% per annum interest. Period is 5 years. right? Hope this is board is visible to you. Government has given a loan to ABC of rupees 10 lakh at a rate of 6%. Period is 5 years. Market rate, market rate is let's say six. Market rate of the loan is, let's say, 10% per annum, right? So what I need to do, I need to recognize a government grant in this case, because there is a, first of all, if I take this loan from the market, I will get it at 10%. But since the government is giving me this loan, I am getting this at 6%. So the to the extent of 4%, I will recognize a government grant. To the extent of 4%, I will recognize a government grant. So what should be the accounting entries? Bank account debit to loan, right? I have received 10 lakh rupees, right? Can you compute what is the value of the loan? Can you guys quickly compute what is the value of the loan? This will be the present value. This amount will be the present value of future liability. Can you compute what is the value? Quickly at 10% discount. Can you guys compute quickly the value of loan? How to compute? Amount is equal to, let me compute here. Amount is equal to principal 1 plus r to the power t, right? What is the amount which I'm going to pay? 10 lakh rupees, right? I need to compute principal. Rate is 10%. Period is 5 years. Can you compute? Can you compute the principal value at 10%? This is saying 6 lakh 20,000, right? 6 lakh, let me write 6 lakh 21,000, right? To government grant 3 lakh 79,000. Bank account debit to loan to government grant. So this loan is a financial liability. This needs to be computed at the present value of future cash outflow, present value of future liability or future cash flow, and the differential, which is a balancing figure, will be recognized as government grant, right? So what is a government grant in this case? What is a government grant in this case? First is I will debit bank, I will credit loan. What is the value of the loan? Present value of the future cash outflow, and the differential is government grant, right? And this government grant shall be accounted. This government grant shall be accounted either as a capital grant or revenue grant. Capital grant or revenue grant, right? Depending upon the terms and condition. Terms and conditions. Right, guys? Any confusion, any doubt in the first entry? Right? If it is a government grant, if it is a capital grant, I have an option either to adjust it from the cost of the PPE, or I have an option to recognize a deferred liability. If it is a revenue grant, then I will account it as a deferred liability if it is more than 1 year, and it will charge to P&L on the some systematic basis. Right, guys? And what is the second accounting entry? I will accrete interest. I will accrete interest. I will accrete interest on this loan. Right, guys? I will make small changes here. let's consider 0%. So to the extent of 10%, right, I will get the benefit. Government has given me a loan of zero rate at 0%, right? I will take a separate example where I will compute the percentage at which the government has given a loan. I will consider the percentage as well, right, guys? So I will compute the interest going forward. So what is the government grant here is? So what is a government grant in this example? Right. So can I say what is the nil or the below market rate of interest? So I have considered that the nil in this example, right? So what is a government grant? So government grant will be the difference between the proceeds minus the fair value of future cash outflow. Government grant is equal to the difference between the proceeds received minus the fair value of the future cash outflow, right? So this will be a government grant. And in the case of forgiven loan, entire amount is considered as government grant. Entire amount is considered as government grant. So I've changed this example slightly, guys. I've changed this example. First, I've explained nil rate of interest. Loan received at nil rate of interest. Loan received at nil rate of interest, right? I will take one example where I will take some percentage. Let me know if there is any doubt in this, guys. Let me know if there is any doubt in this. So Kunal from Faridabad is saying, sir, there is no impact of 4% in this example. So Kunal, what I'm saying is I have changed this example slightly where the government has given a loan of rupees 10 lakh to me or this company at 0% rate of interest. I have first explained the nil rate, right? I will take one more example to explain the scenario where the government is charging below market rate of interest, right? Please let me know, guys, is this clear to you or not? Let me take one more example. Let me rub this. Let me take one more example on this below market rate of interest. Okay, let's say the government has given a loan of rupees 50 lakh at the rate of 5% payable at the end of 5 years in a bulleted payment, right? So I've received a government loan of rupees 50 lakhs, right? Government loan of rupees 50 lakhs. Government loan of rupees 50 lakhs. Rate of interest is 5%. Repayable. What is the repayable terms and condition? After 5 years in a bullet payment. Repayable after 5 years. Single payment. right? Market rate of interest is 12%. Market rate of interest is 12%. Now the government has given me a loan of rupees 50 lakhs and the government is charging 5% on that loan, and which is to be repayable after 5 years as a single payment. And the market rate of interest is 12%. If I go in the market and take a loan from the bank, then it will be at a rate of 12%. But but the government has giving me a loan at the rate of 5%. So that means there is a benefit. That means there is a benefit of 7% benefit provided by the government. And this 7% benefit will be recognized as government grant in the books of accounts. Right? Now, what should be the accounting entries in this case? First is I have received 50 lakh rupees from the government, right, as a loan. So I will recognize as a loan, right? Two, I will recognize the government grant to the extent of 7%. Right? Now, can you guys compute what is the value of this government loan which has been provided by the government at a rate of 5%? Can you guys quickly compute? Right? How to compute cash inflow and outflow? Plot your cash flows. Right? First year, I have received 50 lakh rupees. Right? I have received 50 lakh rupees. At the end of first year, I need to pay interest. Right? I need to pay interest. Let's say this is my year. This is my year zero. Uh, cash flows in future. Cash flows in future. Right? First year, second year, third year, fourth year, and fifth year. Right? Every year, what I need to make? I need to make the payment of interest. Right? So 50 lakhs multiply by 5%. Right? I will get the interest. 2,50,000, right? Again 2,50,000. Again 2,50,000. Again 2,50,000. And then I will make the payment of 2,50,000 plus 50 lakhs. So this will be 52,50,000, right? Present value factor at a rate of 12%. Now, can you guys quickly compute what is the value? Present value factor 1 divided by 1. 0.892, 0.797, 0.711, 0.635, and 0.567. Right? This is how we need to compute. The total is 3.604. Right? Multiply by 2,50,000. Right? Which is around, or can you guys quickly compute here? What is the value I'm getting? What is the present value which I will get? This multiply by this is equal to present value. Can you guys quickly compute? 50 lakhs multiply by 5%. 50 lakhs multiply by 5%. 50 lakhs. Okay. So one person, Sonu Sharma, has computed from Jaipur 37,38,328. 37. So he is saying 37 lakh 37 38 328 38 and 328. So 37 lakh rupees I've got as an amount of the loan, right? So this is the amount which I need to make the payment in the future. 37 38 37 38 328, right? And the differential will be recognized as 50 lakh minus 37 38 328 will be recognized as government grant 20 12 lakh 61,672. So one person, Uma from AP, is asking, why are we considering 10% market rate for calculating present value instead of 6% at which the government has gave a loan? Okay. So Uma, I will use this. I will explain your query by using this example. So in this, the market rate is 12%. Always when we do the discounting, we need to do the discounting at the market rate, not at the contracted rate, right? If I do the discounting at 5% in this example, right? If I do the discounting at 5% in this example, I will get the same amount because first I'm accreting the interest of 5% and then I will do the discounting at 5%. I will get the same amount, right? So what is the grant actually? This 12 lakh rupees is actually reflecting this 7%, right? This 7% is this government grant is actually reflecting the 7%. I need to compute the present value of the future outflow, which is 37 lakh rupees in this example. And the differential will be accounted as a government grant, right? This is how the accounting treatment of the government grant is, right? And what will be the subsequent accounting entry? I will accrete interest to government grant. I will accrete interest, sorry, to loan, right? I will accrete interest on this 37 lakh 38,000 rupees. I will compute interest on every year basis. 328 multiply by 5%. 3738 328 multiply by the 5%. 1869 164 160, right? So 1,86,000 I've got the number. So this is how I will compute or I will accreting interest on every year basis on this loan. Okay, let me complete this question, right? So this is how I need to compute interest for first year, and in the second year, for second year, how to compute the interest? I will compute the interest. This will be the accounting entry, interest to loan, right? What will be the amount of interest? 37 lakh 3738 328 plus 1,86,916 multiply by 5%. That will be the interest for the second year, right? What is this? This is a basic concept, guys. If I deposit 100 rupees in a bank account, if I deposit 100 rupees in a bank account, I will get at a rate of 10%, I will get 110 rupees in the next year, right? And in the second year, I will not get 10 rupees. I will get interest on the closing balance. What is that? This is called compounded annually. This is called compounded annually, right? Let me explain this concept. Why I'm charging interest on interest. If I deposit 100 rupees in bank account at a rate of 10%, so first year I will get 10 rupees, right? And in the second year, I will get 10% of this 110 rupees. And in the third year, I will get 12.10 paisa. So 132, right? Similarly, so on, right? So if the principal of the first year is 3738 328, right? I will add interest at a rate of 5%. What is the interest? 1,86,916, right? What is the amount I will get? 37, 38, 328 plus 186,916. 39 lakh 25,244, right? Then I will again add interest at 5% on this number, multiply by 5%. So I will get 1,96,262 plus 3925,244 412,1506. Then again I will add interest at the rate of 5% on this, right? This is how I need to compute interest on a every year basis. Computation of interest, right? And finally, when this amount will come back to the original amount, which I need to make the payment, which is 50 lakh rupees. And then I will make the payment of 50 lakh rupees after 5 years, right? Any doubt on any of these accounting entries? Okay, so one Neha has raised Rajasthan. Neha has raised one point from Rajasthan. Sir, what if the loan is repayable in EMI? So when Neha loan is repayable in EMI, so if you remember that I have considered the repayment number as the interest. If it is payable in EMI, then I will consider that EMI in my working, and accordingly the present value will be computed. So in that case, the present value will be higher if I'm paying the EMI because I'm repaying the principal over the period of time, right? I hope this is clear to you, right? So couple of people has computed some different number like 37 lakh. I have got 37 lakh 38,000, right? Some people are saying, sir, we have got 37 lakh 35,000, right? It may be because of the rounding of principal, right? But everything needs to be considered correctly. And in the exam, it is more likely that you will get what is the discount rate you need to adopt and what is the fair value, present value factor, right? It is generally given in the exam. So there is no doubt in that. I hope the loan, how to account for the government loan at below market rate of interest or at nil rate of interest, how to compute the number. In the previous example, we have considered nil rate of interest. In this example, we have considered below market rate of interest. Nil rate of interest means market rate is 10% and the government has given me at 0%. So that is a nil rate of interest. And in this example, we have considered that the market rate is 12%, but the government has given me at 5%. Correct. I hope the scheme of accounting entries, the concept of the government grant loan must be clear to you guys. Right? It's almost 8:45. Let's take 10 minutes break, guys. Let's come back after 10 minutes and let's move further. Right? If there is any doubt, please let me know. We'll take up all those doubts. Okay, guys. Let me know if there is any doubt in that. Okay, let's move further. Guys, please let me know if there is any doubt, yes or no at least, so that I will be comfortable that if there is any doubt, I will explain the concept again. And if there is no doubt, we can move further. Right? So next is non-monetary grant. Next is non-monetary grant. Right? If the company has received a non-monetary grant, that will be recognized at fair value. Right? Fair value or nominal value. Right? Fair value or a nominal value. And what is non-monetary grant? Non-monetary grant may be in the form of land or any other resources. Right? Right? If the company, suppose the company has received the land, so what accounting entry I will pass? Asset debit. What will be the accounting entries? Accounting entries. Asset debit to government grant. Right? Either at fair value or nominal value. These will be the accounting entries. Right, guys? Okay, let's move on the third one. The grant related to past losses or expenses. Grant related to past losses and expenses, and government is providing fiscal aid. Government is providing immediate benefit. Immediate benefit. Right? So in that case, what will be the accounting entries? Accounting entry will be bank debit to deferred income or liability. That will be a government grant, right? This deferred income shall be charged to P&L, on the basis of terms and condition, right? That means a systematic basis. Right? All these terms and all these grants shall be charged to P&L. All this deferred income shall be charged to P&L on the basis of certain terms and conditions which is mentioned in the grant, right? Which is nothing but a systematic basis, right? And the fourth one is any grant which has been given which is not specific to the operating activities. Fourth one is grant given not specific to any operating activities. Which is not specific to any operating activities. For example, the grant has been given for to operate in a backward area, right? For privatization, to operate in a backward area or to a privatization. So these are the grant which is not specific to any operating activity, right? For or what can be the other example for any particular industry. Then what should be the accounting entries? Bank debit to deferred income. Bank debit to deferred income, and that shall be charged to P&L on systematic basis. Systematic basis. That shall be charged to P&L on a systematic basis. Right, guys? So these are the various type of grants. So let me summarize what we have discussed. Right, first of all, we have discussed what is government. Government means any national government, international government. In the national government, we are saying center government or the state government, any local bodies, that is a government. So any grant received from the government is called a government grant. And what is a government grant? The transfer of resources. The resources may be in kind, the resources may be in cash, the resources may be in bank, right? In respect of any past or the future condition, in respect of the operating activity of the company, is called government grant. Right, this standard only talks us about the accounting of the government grant and the disclosure of the government grant, but does not talk about the accounting guidance on government assistance. What is the government assistance? For example, technical advice given by the government to any company, technical advice given by the government to any particular industry, right? Marketing advice given by the government, that is an assistance which is given by the government. That is not to be included in this standard. Only the disclosure needs to be given in the financial statement. Right, then we talked about the various types of the grant. First is capital grant and the revenue grant. Right, revenue first is capital grant. Capital grant, what is the capital grant? Where the primary condition is the acquisition of the property, plant and equipment. If the government is providing a grant in order to acquire a property, plant and equipment, then it is considered to be a government grant in the nature of capital grant. Right, and what is the accounting treatment? There are two options. One option is deduction from the cost, and the second option is recognition of the deferred liability. Right, uh, in case of the first option, deduction from the cost, the entire amount of the government grant need to be deducted from the cost, right? And then we need to compute the depreciation. What is the method of depreciation? What is the formula? Depreciation is equal to the gross value of the asset minus residual value minus government grant divided by the useful life is equal to the depreciation. Right, this is called a net accounting because we are reducing the government grant from the cost of the PP. Second option is deferred liability, in which we recognize the government grant as a deferred liability and not as a deduction. And that deferred liability will be charged to P&L in the on the basis of the useful life or on the basis of the proportion of the depreciation in the P&L. Right, and we have taken two examples and we have seen that the accounting in both the example will remain the same. The accounting impact in both the example will remain the same. The net impact in the P&L in option 1 and the net impact in the P&L in option 2 will be the same. Right, then we have talked about revenue grant. What is revenue grant? Revenue grant means the grant which is not a capital grant. Accounting treatment, bank account debit to deferred revenue. It depends upon the terms and condition as well. Right, it shall be charged to P&L. It shall be charged to P&L. If there is no condition attached, it will be charged to the P&L in the same year. But if there is a condition attached to it, then we need to recognize that deferred liability into the P&L on a systematic basis. What is a systematic basis? Systematic basis is the related cost. The way I am recognizing that cost in the P&L, on that basis I will charge that government grant deferred liability in the P&L. Right, that will be recognized either as a reduction from the cost, and that will be recognized either or as a other income in the P&L. So these are the two grants which we have talked about. In the third scenario, we have talked about four grants. One is the nil or the below market rate of interest. What is nil and the below market rate of interest? Where the grant has been given by the government, which is lower than the market rate of interest. Maybe zero, maybe 6%, maybe 8%, if the rate is 10% or 12%. Right. So in that case, how to account for that? So in that case, we have said that we need to first compute the value of the liability which we are going to pay in the future, right? That will include interest and the principal. That needs to be discounted at the fair market rate, and the value which I will get, that will be accounted as a loan, and the differential will be accounted as a government grant. And then I need to see whether it is a revenue grant and a capital grant. On the basis of that, I will account for that. And if it is a forgivable loan which is not to be repayable to the government, then then the entire amount will be considered as a loan. Entire amount shall be considered as a government grant itself. Then secondly, we have talked about the non-monetary grant received from the government. It may be in the form of any resources like land or etc. In that case, I will recognize bank account debit to government grant. Or in that case, I will say instead of bank, I am getting land, so I will recognize land account debit to government grant, right? And that will be recognized either at the fair value or at the nominal value. In the third scenario, we have said where the grant has been given as a fiscal aid, immediate impact, immediate benefit, where the company has incurred a losses or where the company has incurred any expenses in the past. That will again be recognized like bank account debit to government grant. If there is no condition attached, direct impact to the P&L. If there is any condition attached, it will be recognized in the P&L on a systematic basis. Right? What can be the systematic basis? Cost. The manner of incurring the cost is also a systematic basis. Then we talked about not specific to the operating activities of the company, right? Which is for the privatization, operate in the backward area to a particular industry where the grant is given. In that case, again, the accounting entry will remain the same, bank account debit to deferred income, and it will charge to a P&L on the basis of the terms and condition, right? On a systematic basis. What is systematic basis? The cost is also a systematic basis, right? So if I segregate the entire accounting entry or summarize the entire accounting entry, only in case of option 1, deduction from the cost, I am adjusting the government grant from the cost. And in all the other cases, I'm saying bank account debit to government grant or a deferred liability, and that deferred liability shall be charged to P&L on the basis of systematic basis. And that systematic basis can be a incurring of cost by the companies as well, right? So that is what the summary of Ind AS 20, right? On the basis of these guidance, let's take some practical example, guys, to understand what are the key nuances of this standard. Let me present my screen also, right? Let me share my screen. Let me know if you are able to see my screen. Okay, guys. Government gives a grant of rupees 10 lakh for research and development of a H1N1 vaccine to XY Pharmaceutical Company Limited. Right? I hope my screen is visible. Please let me know yes or no, guys. Today I'm getting very low response from you guys. At least say yes or no. Okay. Government gives a grant of rupees 10 lakh for research and development of H1N1 vaccine to XY Pharmaceutical Limited. There is no condition attached to the grant. There is no condition attached to the grant, right? How this grant will be recognized? What is your view, guys? How do you recognize this grant in the books of accounts of the company? In the books of account of XY Limited, how do you recognize this grant? Any doubt? Any views on this? Okay, so in this case, what is happening? The government is given a grant of rupees 10 lakh for the development of the vaccine, right? So development of the vaccine, this is not a capital grant, right? So, and there is no condition attached to it. So what should be the accounting entries? The accounting entry is very simple: bank account debit to deferred income, and there is no terms and condition attached. So this has become actually a a revenue grant, and this will be recognized directly in the P&L because there is no condition, no terms and condition attached to it. Okay, so a couple of people have raised some points. So they are saying it's visible, sir. Okay, thank you guys. Let's take one more example. Government gives a grant of rupees 10 lakh for the research and development of H1N1 vaccine to XY pharmaceutical company, even though similar vaccine are available in the market but are expensive, right? The entity has to ensure by developing a manufacturing process over a period of 2 years that the cost come down by at least 40%, right? Cost come down to at least 40%. So that means the company has received a grant of rupees 10 lakh to develop a vaccine so that the cost of that vaccine will be lower. And the company has to do that exercise, or company has to do the research to reduce the cost for the next 2 years, right? So first of all, it is not a capital grant, right? So if it is not a capital grant, it becomes a revenue grant, right? If it becomes a revenue grant, what is the accounting entry? Bank account debit to deferred liability, right? And I need to check, is there any terms and condition attached to it? The terms and condition in this example is saying it should be the company should ensure the manufacturing process in the next 2 years. Company should evaluate in the next 2 years, right? So I need to recognize this deferred liability in the P&L on the basis of a systematic basis. What is a systematic basis? Lowering of cost is also a systematic basis. So on the basis of the cost incurred in the next 2 years shall be recognized. This grant shall be recognized on the basis of the cost to be incurred in next 2 years. So entire grant shall be recognized as a deferred income and credited to P&L over the period of 2 years. I hope this concept is clear to you now, right? Okay. A village of artisans in a district got devastated because of the earthquake, right? A Limited was operating in that district and was providing employment to the artisans. Government gave a grant of rupees 10 lakh to A Limited so that 100 artisans are rehabilitated over the period of 2 years. During the year, the government released 2 lakh rupees, right? So 2 lakh rupees government has given a grant. That means government has sanctioned a grant of rupees 10 lakh, right? Government has sanctioned a grant of rupees 10 lakh, but during the year, the government has only released 2 lakh rupees, right? And and how should be the accounting treatment to be done in the books of accounts, right? So what will be the impact? A Limited will recognize a government grant of rupees 8 lakh and set it up as a deferred income and will recognize it in the profit and loss over the period of 2 years as per the principles of Ind AS 20. So what should be my first accounting entry? I will recognize a government grant of rupees entire 10 lakh. That means government grant receivable to deferred income of rupees 10 lakh, and this 10 lakh rupees will be recognized in the P&L over the period of the terms and condition, right? And since I have received 2 lakh rupees, second accounting entry will be bank account debit to to government grant receivable, right? So what is the answer this is saying? A Limited will recognize 8 lakh rupees as government grant. So the closing balance will be 8 lakh rupees, and it set it up a deferred income will be recognized in the P&L over the period of 2 years. So what is the terms and condition? Terms and condition is the 2 years. So it will be recognized in the P&L for the period of 2 years. Right, guys? I hope this question must be clear to you. Okay, presentation. So presentation we have already discussed in respect of the capital grant. How should I present? I will present. I have two options. One is deduction from the cost, and second one is the deferred income. In case of the grant related to income or a revenue grant, I can recognize as a other income, or I can reduce the income from the cost itself. Right? Okay. Okay. Let's take some examples as well. Let me disconnect this thing. Just give me a moment. Let's take some example. Okay. Okay, guys, let's take some practical case studies or the examples which have came in the past examination in November 2018 and May 2019, right? Okay, 100 lakh rupees received from the immediate startup of the business without any condition. 100 lakh rupees received for the immediate startup of business without any condition. So guys, you need to be very quick now, whether it is a government grant, yes or no. Whether is it a government grant? I have received 100 lakh rupees to start up my business without any terms and condition. Is it a government grant? Yes or no? I'm waiting, guys. People have to respond now. I'm not getting the response. Yes or no? Yes, one person has reverted. Out of many people, only Nivedita from Tamil Nadu. Yes, it is. It is a government grant. And what should be the accounting entry? Nivedita, what should be the accounting entry? And how it should be accounted for? If I've received 100 lakh rupees, the accounting entry is very simple. Bank account debit to deferred income, right? And if there is no terms and condition attached to it, it will be recognized directly in the P&L in the year in which it is received, right? Recognized in the statement of profit and loss immediately as there are no condition attached to the grant, right, guys? What else? 70 lakh rupees. These are the questions which have been asked in the exams, guys. Okay, 70 lakh rupees received for research and development of drug required for the treatment of the cardiovascular disease, which is 20% lower than the market price, right? So I've received 70 lakh rupees for development of one vaccine. And what is the objective? To reduce the cost as compared to 20% of the market price of the particular period. So whether it is a government grant, yes or no? Whether it is a government grant, yes, this is considered to be a government grant. And what should be the accounting entry? Accounting entry will remain the same, bank account debit to deferred income, and it shall be charged to P&L on the basis of the systematic basis. What is the systematic basis? The cost, right? What is the answer? Recognize in the profit and loss on a systematic basis over the period in which the entity recognizes as expense the related cost for which the grants are intended to compensate, right? Okay. Another question. 5 acres of land, fair value 20 lakh rupees, received for setup of the plant. The 5 acres of land have been received to set up a plant. So this is what a non-monetary grant, right? Whose market value is 20 lakh rupees. Whether it is a grant, yes, it is also a grant. How to account for? First is what we have learned. The non-monetary grant shall be recognized either at fair value or at nominal value. What is the accounting entry? Land account debit or the bank account debit to deferred income, right? To deferred income that shall be recognized. That shall be recognized either at fair value or nominal value. Recognize at fair value of 20 lakh rupees with the corresponding deferred income. Alternatively, since the land is granted at no cost, it may be presented in books at nominal value. Right, guys? Okay. Receive 1 acre of land to set up a plant in backward area. Acquired by government at 8 lakh rupees. So government is acquired at 8 lakh rupees and the fair value of land is 12 lakh. So at the price at which the government has acquired does not matter. I have received 1 acre of land. That is again a government grant and it is a non-monetary grant. So I will recognize either at fair value or I will recognize at fair value or at nominal value. Right? So grant will be recognized at fair value at 12 lakh rupees and this grant should be presented in the books of account as deferred income. Alternatively, since the land is granted at no cost, it may be presented in the books at nominal value. Land will be shown in the financial statement at 1 rupee, right? So these are the answers which have been given by the institute itself. Right, guys? Okay. 5 acre of land received for setup, the same question that has been repeated again and again in the past. It will be recognized non-monetary grant. It is a government grant, non-monetary nature. It will be recognized either at fair value or nominal value. Okay, 4 lakh rupees grant received for purchase of machinery of rupees 10 lakh, right? Useful life is 4 years. Depreciation is to be charged on straight line. So this is the amount of 4 lakh rupees received by the company for the purchase of machinery, for the purchase of PPE. This is nothing but a capital grant. So company has an option, either go for the option one or option two. Option one is deduction from the cost, and the option two is adjustment or recognition of the deferred income, right? Let's see, it is considered to be a government grant. Secondly, 4 lakh rupees will be deducted from the cost of the asset, and depreciation will be charged at a reduced rate of 6 lakh rupees, and the depreciation per year is 1 lakh 50,000, right? Alternatively, this will be this will be recognized as deferred income in the P&L, deferred income in the balance sheet, and then it will be charged to P&L on the useful life or on the basis of the proportion of depreciation. Right, guys? So these are the different questions which have been asked by institute or which have been asked in the exam at the different point in time. Let me take one or more case study. Right. Okay. Let me write on the board this case study. Okay. So please let me know, guys. Have you received the PPT and the FAQs? Uh, I have prepared one PDF file or a Word file which I've converted into the PDF, in which I've documented all the questions in respect of the study material and in respect of the exam questions which have been asked in the exams in the past. Have you received those files? Please let me know. Meanwhile, I move forward. Question number 10 of PDF file, right? If not, you will receive today itself because I've shared it yesterday itself. Okay, let me put the question. PQR Limited set up a new factory in the backward area and purchased the plant of rupees 500 lakhs. So PP has been purchased at 500 lakhs, right? For the purpose, the purchase were entitled to input credit. So this purchases is entitled to input credit of rupees 10 lakhs, right? And also the government grant is agreed 20% subsidy, and the grant is 20% subsidy, right? Compute the value, depreciated value, not received. So don't worry, you will receive all the information today itself. I have shared one PDF file. I have shared the PPT, right? In that PPT, I'm discussing the question number 10, right? And the facts of all the question of PDF file I have mentioned here. The company has purchased the PPE of rupees 50 lakhs. Company is entitled to the input credit of rupees 10 lakhs, and the government grant is 20% on that PP, right? So in that case, I need to compute what is the depreciable value of that asset, right? So first of all, guys, we just need to understand how to compute the cost of the PPE. How to compute the cost of the PPE. Let me write that. Let me go to Index 16 for sake of moment, right? What is PPE? Right? Purchase price plus directly attributable cost minus plus any taxes, any non-refundable taxes, minus refundable taxes, right? Minus any discounts and plus dismantling cost. right? This is how we need to compute. This is how we need to compute the cost of the PPE, property, plant, and equipment, right? This is given under Index 16. Apply this logic. I have purchased this PPE. First, I need to compute the cost of PPE, computation of cost of PPE, right? So my purchase price is 500 lakhs, right? Then we have got the entitled to the input credit. This input credit is nothing but a refundable tax. The the tax which I paid earlier, I will be eligible to get the input credit. So what I need to do, I need to deduct this input credit, right, of rupees 10 lakh. So 490 lakh is the value of PPE, right? Now I need to compute computation of depreciable value of PPE, right? So cost of PPE value is 490 lakhs minus government grant. If I have chosen option 1, if I have chosen option 1, so what is the government grant? 20%. So what is the amount of 20% of this 490? 49 into 2, 98. So this will be 98 lakhs. So this will be 392 lakh value of PPE, which is eligible for depreciation. PPE value is 490 and government grant is 98 lakh rupees. So absolutely, Ambika has raised this. Ambika has computed the value 392 lakh rupees. Very good. In option 1, and Nevita has also computed 490 lakh rupees. Very good. So Nevita, you have just computed here. We need to reach this at 392 numbers. We need to reduce the subsidy value from the cost, right? But if I do the option 2, so what will be the counting in the option 2? So how to compute option 2? Option 2, which is a deferred liability, right? In case of option 2, what I need to do? In case of option 2, my PPE value is 490 crores and deferred liability is 392 crores, 490 lakhs, and this is 392 lakhs. Entire number says in lakhs, right? And this will be charged to P&L, charged to profit and loss on the basis of depreciation. Okay, one person is saying, should we not take the 20% of 500 lakhs? No, right? So the question is saying the government has extended the value 20% subsidy for the backward area. So ultimately the cost which are available, or which the cost which the company is incurring on the PP is 490 lakh rupees, right? This is the value. So otherwise what will happen? The company will also account for government grant on this number. If I don't reduce this, so I need to consider 20% on 490 and not on 500 lakhs, right? So why the government is giving me the benefit to the cost incurred by me? So I have actually incurred a cost of rupees 490. I have not incurred a cost of rupees 500. So that is why the government grant has been given on the net cost incurred to the company. So this is a small trick on this example. Instead of computing on 5%, it is to be computed on 490. Right? I hope this is clear to you. Let me know if there is any doubt. Okay, guys, let's take one more example. Let's take one more example. Should we rub this? I hope this must be clear to you. Okay. Okay, guys. Now I am going to take up a question of November 2020 RTP. It is a good question. So people are saying deferred liability will be 98 lakh rupees. Correct. Deferred liability will be 98 lakh rupees if I have recognized the option 2. Okay. So let me read the question. November 2020 RTP. Right. Let me put the case study here. Entity A is awarded a government grant of 60,000 receivable over the period of 3 years. Government grant receivable, right? How it is receivable? First year, second year, and third year. 60,000, 40,000, 10,000, and 10,000. That means the total government grant is 60,000. Entity A is awarded a government grant of 60,000 receivable over the period of 3 years, contingent on creating a 10 new jobs and maintaining them for the period of 3 years. So when this grant will be receivable, company has to create 10 new jobs, right? And maintain them for 3 years, and maintain them for 3 years, right? The employees are recruited at a total cost. So total cost of the employees have been given 30,000. Wage bill. Okay. So cost has been given. Recruitment cost. Recruitment cost is first year. This is year first, second, and third. First year, I have incurred a cost of rupees 30,000, and the wage bill, wage cost, wages 1 lakh rupees, and it is increasing like by 10,000 rupees, right? So I have incurred a cost of rupees 3 lakh 30,000, right? Calculate the grant and the deferred income to be accounted in the books for the year one, in the year first, second, and third, right? Okay. So this is the question, guys. Government grant, the company has received a government grant of rupees 60,000 rupees. And why this company has received a government grant? Because the company has to create a 10 new jobs and maintain them for the period of 3 years, right? And the company has incurred a cost on the recruitment 30,000 rupees, 30,000 rupees, and the wages cost is 3 lakh 30,000 rupees. Now the question to you, how should we recognize this 60 lakh rupees in the P&L? How should we recognize this 60 lakh rupees in the P&L? Can you guys let me know how to compute this 60,000 rupees, which is to be recognized in the P&L? Can you guys please let me know how to recognize this income? Okay, so Kunal has raised one point, sir. Please tell the team to share the PPT. I will ask the team to share the PPT today itself. Don't worry. Okay, so let me write the answer. So how to be recognized? The total cost which I've incurred is 1,30,000, 1,10,000, and 1,20,000 rupees. Right? So this is 3,60,000. This is 3,60,000 rupees, the total cost which I've incurred, right? And the government grant I have received 60,000 rupees only, right? So how to compute? 1,30,000 divided by 3,60,000 multiply by 60,000. What I've done, I am just recognizing the pro rata. I'm just computing the number on the basis of the cost. I'm just computing the grant which I've received on the basis of the cost. What is the cost? The cost is total of recruitment cost and the wages cost is my total cost. On the basis of that, I'm computing this value, right? So what is the value? 1,10,000 divided by 3,60,000 multiply 60,000. Second is 1,20,000 divided by 3,60,000 and multiply by 60,000. This is the amount of the grant which we will get. Right? What is the number? 1,30,000 divided by 3,60,000 multiply by 60,000. So 21,667 I will get. So this is the allocation. 21,667, 2166 in the second year, 1,10,000 divided by 3,60,000 multiply by 60,000, 18,000. 18,333 and 1,20,000 divided by 3,60,000 into 60,000, and this is around 20,000, right? So the total should be 60,000 only plus 21,667. This is how we should recognize the government grant on the basis of the wages and recruitment cost, right? So actually what has happened on the day one itself, the grant I have received 40,000 rupees, right? I have received a grant of rupees 40,000. This is a received number, right? This is a received number. This is received, right? But I will recognize my income in the P&L, deferred revenue, right? Income in the P&L income, right? What is the income? 21,667, 18,333, and 20,000, right? 60,000. So what will be the deferred income on every year basis? This will be the deferred income on the every year basis. 40,000 minus 21,667, 18,333, right? This is 833 and this is 10,000. This is 10,000. This should be 0. 40,000 minus. This is negative. Right, guys? So what we have done, the company has received a grant like this, 40,000, 10,000, 10,000, and we have computed the allocation of that 60,000 rupees on the basis of the recruitment and the wages cost. On the basis of this total, I have computed the government grant, right? And this is the number which I will need to recognize in the P&L. So what is the deferred liability which exists in the balance sheet? Amount received minus deferred income minus the income which will be recognized in the P&L will be a deferred liability. And this is how we need to compute the cost, or this is how we need to compute the recognition of the government grant in the P&L. Any doubt in this case, guys? Concept will be same. Concept is same, that we need to compute the cost. We need to recognize the government grant in the ratio of the cost. What is the cost in this case? Recruitment and the wages. Right? Happy to take up your questions. Okay, Chavi from Haryana has said correctly 21,000, 18,000, 20,000 rupees. Now the final working will be like this. This is the amount which I've received minus amount which I've recognized in the P&L, and this is the deferred income, right? If I need to pass the accounting entry for year one, let's say I have received bank account debit 40,000 rupees to deferred income 40,000 rupees, right? And second entry will be P&L deferred income debit to P&L other income, right? What is the amount? 18,033. This is how we need to account for this example. I hope this must be clear to you guys. Let me know if there is any doubt on this. Right? Okay. Now let's take couple of practical issues. Right? We have taken couple of exams question, couple of case studies. Let's take couple of practical cases which generally company face. Okay. Okay, one person is saying, sir, what is the difference between the Chavi from Haryana is raising one question. What is the difference between the fair value and nominal value? Okay. So Chavi, fair value is the market price, right? In case of non-monetary asset, I need to recognize at fair value. So I need to get the fair valuation done from the market from a third party, and then I need to recognize that value. And the second one is nominal value. Nominal value is that means any amount, maybe 1 rupee, maybe 100 rupee, maybe 1,000 rupee, at which I will recognize that asset in my books of accounts in order to maintain the identity of that asset. If I have received a land without any cost, right? So I need to account for that land at what price? Maybe at fair value, the value of the land may be 1 crore rupees, but the nominal price may be 100 rupees, maybe 10 rupees, maybe 1 rupee. So it's my choice at what value I need to recognize. It will not have any impact in the P&L, right? Because land is not a depreciable asset. So that is the impact, that is the difference between the nominal value and fair value. So Ambika from Mumbai saying, sir, normally it will be recognized on the basis of cost. Yes, normally it will be recognized in the basis of cost. But if we look at the standard is saying it will be recognized on a systematic basis, right? And the method of, and what is systematic basis? It may be a cost or it may be any other thing. Okay, sir, I have raised a query. Have you received what is the difference between deferred income or deferred liability? That is nothing. Both are same. Sometimes people say there's a deferred income which is recognized in a liability or direct as a deferred liability. No difference in that. Okay, guys, some practical case studies. Right? First, let's say government, right? And this is a ABC company. Government is a shareholder. Government is a shareholder, 100% owned by the government. Shareholder. Now, in this case, the government is a shareholder of ABC company, and government has given a grant of rupees, let's say 100 crores to ABC company. Now, in this case, if you remember at the start of the session, we said that the government grant where the government is a shareholder is outside the scope of Ind AS 20, right? So this government grant is outside the scope of Ind AS 20, where government is a shareholder, where government is a shareholder, right? Under Indian GAAP, the promoter contribution, the promoter grant is recognized in the capital reserve. So here, this will not be recognized as a promoter grant. This grant will not be recognized as promoter grant, and therefore shall not be recognized in capital reserve, right? So what will be the accounting entries? So accounting entries will be the bank account debit to deemed capital contribution. What is the accounting entry? Bank account debit to deemed capital contribution, right? उसको मान लिया जाएगा where the government is a shareholder, उसको मान लिया जाएगा the amount given by the government is nothing but a deemed capital contribution, right? This shall not be accounted as per Ind AS 20. Then we need to apply the substance of the transaction, right? What is the substance? This will be accounted as a deemed capital contribution, and this will be recognized in statement of changes in equity. Correct, guys? This will be recognized in the statement of changes in equity. Okay. I hope there should not be any confusion in this. Another cases where the company has taken option 2, capital grant. Capital grant, deduction from cost. Capital grant, recognition as deferred income. Option 2, recognition as deferred income. Option 2, right? Now you guys must have read the AS 28 Indian GAAP impairment indicators, impairment standard. So when the company is going, when the company is completing their financial statement, right? Company need to test the impairment if there is any impairment indicator exist. Similarly, under Ind AS, we have Ind AS 36, which says the impairment testing needs to be performed by the company if there is any impairment indicator exist, right? So how to compute the impairment indicator? How to compute the impairment testing? How to perform the testing? Impairment. So now we need to understand slightly Ind AS 36, which is saying impairment loss. How to compute the impairment loss? Carrying value minus recoverable value, right? Let me write the full form. Carrying value of PPE minus recoverable value of PPE, right? So this guidance says that if the company has received a government grant and the company has recognized a deferred income, while computing the impairment loss, I need to compute the carrying value. And while computing the carrying value, this deferred income shall be adjusted while computing the impairment loss. Right? So what we need to do, so a couple of people have raised the question. Let me complete this topic, then I will take up the question. So the deferred grant shall be adjusted in the carrying value while computing impairment. Right? Simple point. So what, where the company has taken any deferred option and it was lying in the balance sheet in case of the capital grant, that deferred liability, that deferred income shall be adjusted while computing the carrying value of PPE at the time of testing of the impairment. Right? That is what the meaning is. Sometime it happens when the company is testing for the impairment, this deferred income people generally miss while deducting this, while adjusting this deferred income in the carrying value of the PPE. So at the time of performing the impairment testing, this adjustment needs to be made. Right, guys? Okay. So one person, Ambika from Mumbai, saying, sir, any percentage shareholding is considered as deemed contribution. So it does not mean, Ambika, it does not mean that the every time every percentage is considered as a deemed contribution. It depends upon the case to case basis. It depends upon the case to case basis, right? It depends upon the terms and condition which is attached. It may possible the government is owning only 40%, right? And the government has given 100 crore rupees. Then we need to evaluate what are the different terms and condition attached to that 100 crore rupees. The example which I have taken, I have not attached, I have not mentioned any kind of conditions here. So if any condition is not there, then I will say it is a deemed capital contribution. Right? I hope it is clear to you. Okay, guys. Couple of small topics have been left. Okay, let me present my sheet on my screen. Okay, so sometime it may also possible that once I've received a grant due to certain non-compliance of the terms and condition, I need to repay that government grant back to the government. So in that case, what should be the accounting entries and what should be the scenario? If it is related to the asset, then what I need to do, if I have taken the option one, that means I've already reduced from the cost, then what I need to do, I need to increase the my PPE. So in that case, what will be the accounting entry? PPE debit to bank. And if I have taken a second option, which is a deferred liability, so what I need to do, deferred liability debit to bank. But if I've treated my government grant related to the income, so what I need to do, so whatever the unamortized deferred liability which is lying in the balance sheet, I will reduce that liability. And if there is any delta, then it will be charged to P&L. And the refund of the government grant shall be accounted as a change in the accounting estimates. Simple accounting treatment. If the government grant has been repayable back to the government, what should be the accounting entry in case the grant will be treated as an asset, or in case the grant will be treated as a income? In case of income, the deferred income, the unamortized balance of the deferred income which is lying in the balance sheet will be reduced. And if there is any balance left, it will be charged to P&L. Okay. What is the key gap difference between Indian GAAP and Ind AS? So first of all, the guidance is given under Ind AS 12, AS 12 of Indian GAAP, and under Ind AS 20. Right? Monetary grant related to the non-depreciable asset. Monetary grant related to the non-depreciable asset under Indian GAAP, it will be taken to P&L. But under Ind AS, we are not saying anything will be taken to capital reserve. Under Ind AS, we are saying everything will be charged to P&L. Initially, every grant shall be recognized as a deferred income, right? And after that, it will be charged to P&L on the basis of some systematic basis. Non-monetary grant, Indian GAAP, either at cost or nominal value, but under Ind AS, we are saying fair value or notional value or nominal value. Grant in the nature of promoter contribution, we are saying that it will be treated as a capital reserve or it will be treated as a shareholder funds, right? But under Ind AS, there is no such concept exist. Where the loan at the concessional rate has been given to the company by the government, then there is no guidance available under Indian GAAP, and there is a guidance available under Ind AS. And under Ind AS, what we are saying, whatever amount we have received in respect of the loan at below market rate of interest, what is the government grant in that case? Government grant is equal to proceeds minus the fair value of the future liability will be recognized as government grant. Government assistance, Indian GAAP does not provide any guidance on government assistance. In Ind AS only provides the guidance on government assistance on the perspective of disclosures. Right? What is the disclosure? Accounting policy of the government grant to be disclosed in the financial statement. Methods of presentation, capital grant or revenue needs to be disclosed in the financial statement. Nature and extent of the government grant recognized needs to be disclosed in the financial statement. Implication of other form of government assistance from which the entity has been benefit. If the government has provided any government assistance, then that needs to be disclosed. And if there is any conditions which have not been fulfilled till now, which the company has to fulfill in the future, that also needs to be disclosed in the financial statement. So these are the disclosure requirements of Ind AS 20, guys. Let me know if you have any doubt in respect of any question which we have taken, or any doubt in respect of any concept which we have taken today. Open to you guys. Happy to answer. Any question, guys? I'm waiting. Please let me know yes or no. Any question? Happy to answer, guys. This is a simple standard. I would request, this is same as per Indian GAAP, some sort of slight difference from Indian GAAP to Ind AS. I would request, you must have prepared the coaching notes, right? I would request if you guys can go through your coaching notes, and if there is any problem, then we can discuss separately as well. Right? Any doubt, guys? I'm asking again and again. Please let me know if there is any doubt. If there is no doubt, please let me know no, right? At least so that I will get some sort of motivation from your remarks. And in respect of the PDF file and the PPT, I will discuss the team member today. They will share it today itself on the site. So Bharat from Bangalore is saying, sir, thank you for a wonderful session. Thank you, Bharat. Any doubt? I'm looking for the doubts. I'm looking for the doubt, guys. If there is no doubt, we can wind up the session. Okay, guys, thank you very much. If there is any doubt, we can discuss tomorrow. Thank you very much. And I request you to please go through the Ind AS 20 standard. 4 or 5 times the question have been asked on this standard, and this is a pretty much simple standard, right? So thank you very much, guys.